It is the end of the Second World War, the deadliest conflict in history, but it also marked the rise of America as the most powerful country in the world. The dollar is now the world's reserve currency, and one American bank has climbed to the pinnacle of the banking world, becoming the largest private bank in the world, Bank of America.
Bank of America was the largest bank in the nation by assets and market capitalization. Today, it serves more than 68 million customers in the U.S. and internationally.
Behind this banking empire is a financial titan of unlikely origin, the Italian immigrant, Amedeo Giannini.
It's a game for them. When you're at that level, it has all just become a game. It's a game of confidence, a game of loans.
Giannini's childhood is anything but normal. His father, Luigi, arrived in California during the gold rush and soon built a successful real estate business. The family thrived by buying properties and hotels, renting them out to other Italian immigrants. His father was a hard-working entrepreneur who made his first fortune in fishing, farming, and viniculture.
His father, Luigi, invested all his savings in renting and renovating a house, which he turned into the Swiss hotel, which catered to Italian day laborers. After 2 years as the owner of the hotel, Luigi successfully sold it and with the proceeds bought 40 acres of land in the small town of Alviso.
But Giannini's peaceful childhood was abruptly shattered by a life-altering incident. Giannini was 7 when his father was shot dead during a labor dispute. The tragic death of his father forced young Amedeo to mature quickly and take on new family responsibilities.
It's called post-traumatic growth. There may be things that children and young people take from it, a greater sense of maturity, a different sense of purpose.
His mother, Virginia, a young widow with 3 children, stepped into her husband's role, managing the farm.
At this time, Giannini learned the value of hard work. He had to live a very disciplined lifestyle from a young age, getting up early in the morning to sell produce with his mother. But this experience allowed him to gain practical skills and knowledge about how businesses operate.
Giannini's mother, Virginia, soon remarries another Italian immigrant, Lorenzo Scatena.
The two met while she was selling her produce and they became good friends. He was a gentle, amiable man with a ready smile, and her children seemed to love and respect him to the point of calling him Pop or Boss.
Lorenzo takes over the family's farming business, and Giannini becomes the bookkeeper, and soon his business talent shines.
He was a skilled operator. At the age of just 14, he expertly handled the logistics of the family's grocery business. For example, sourcing oranges from Southern California and bringing them to San Francisco.
At just 21, he fully takes over the family business, leading it to unprecedented profits.
He had a unique way of doing business and was especially interested in laying a foundation of trust and goodwill, as well as building relationships that would support his father's business over time. He was focused, determined, always on the go, either by horse, buggy, or riverboat, working more than 18 hours a day, often skipping lunch, which he deemed a waste of valuable time.
In 10 years, he transforms the family's farming venture into a successful grocery store in San Francisco, generating hundreds of thousands of dollars a year. But then, at the height of his success, Giannini does the unexpected. At 31, he retires from the grocery business, eager to find a new industry to conquer. The early 20th century brings industrial growth to the Bay Area, with shipyards, manufacturing plants, and other industries emerging. The influx of population and businesses into San Francisco and its suburbs led to rising property values. Giannini recognizes that real estate and banking are at the heart of this economic boom. To break into these industries, he needs capital and opportunity.
At the time, his wife came from a wealthy family, and when his father-in-law passed away, he left his entire inheritance to Giannini instead of his own sons, demonstrating the immense respect he had for Giannini.
The inheritance includes real estate holdings and stocks in a local bank. But Giannini quickly realizes that the bank is corrupt, much like the rest of the industry. To make a real difference, he needs to start his own bank.
AP, being himself the son of hardworking Italian farmers, founded his own bank, mainly because he was outraged by how other banks in North Beach neglected the Italian citizens of San Francisco's Italian colony, which included his own family. The majority of his customers were immigrants who could hardly speak English.
By giving out loans to the working class, the Bank of Italy becomes a huge hit. By 1905, less than 2 years after its launch, the bank amasses $1 million in capital. The future of the bank looks bright.
The 1906 earthquake completely changed how we saw the science of earthquakes. The earthquake woke everybody up early in the morning on April the 18th of 1906. The epicenter was on the San Andreas Fault, just offshore from San Francisco, and then it ruptured to the north and to the south along the fault. Most of the city at that time was wood frame construction, but there were some steel frame buildings. And so the earthquake did a lot of damage across the city, but of course, most of the damage was actually due to the fire that then followed the earthquake.
The San Francisco earthquake of 1906 is one of the most destructive in recent history, resulting in immense destruction and followed by uncontrolled fire that consumed much of the city. Before the fire reaches his bank vault, Giannini and his stepfather load the bank's funds, including cash, gold, and silver, onto wagons, disguised with crates of fruit and vegetables. They endure a grueling all-night journey to reach San Mateo, Giannini's home. Giannini's foresight and quick action prove ingenious. While other banks are rendered inoperable, he establishes a temporary banking operation on Washington Street, using a makeshift desk to provide immediate financial support to those affected by the disaster.
Giannini and his bank made an extraordinary move. Most banks at the time were afraid to lend money, but Giannini offered unsecured loans to anyone based on only personal trust.
Giannini has turned a disaster into an opportunity. After the earthquake, the Bank of Italy becomes the most trustworthy bank in the region, and people begin to pour their deposits into the bank. During the panic of 1907, Giannini's strategic foresight and decisive actions once again safeguard the bank's stability and customer confidence. Despite initial resistance, he expands into Los Angeles, bringing inclusive and accessible banking to the rapidly growing city. Giannini's vision soon extends beyond California, creating a network of branches that provide reliable financial services to diverse communities in cities like Chicago. But to truly build a banking empire, he knows there is one city he needs to break into: New York. But there's a huge problem. New York is already dominated by another titan, J.P. Morgan Jr., and he is not about to let an outsider intrude on his territory. After his success with the Bank of Italy, Giannini realizes that branch banking is the future. He envisions branches of his bank spread from coast to coast and ultimately globally. To do that, he needs to open a branch in the most prestigious city in the world, New York. Following a record year of profit, Giannini uses the additional income to acquire Bank of America at 44 Wall Street, a struggling mid-sized bank at the time.
He then merged the Bank of Italy with Bowery and East River National Bank and the Commercial Exchange Bank to form the Bank of America National Association, making it the third largest bank in New York.
But Giannini's rapid advancement into New York is seen as a declaration of war to the king of Wall Street at the time, Jack Morgan. In the 1920s, Jack Morgan is the most powerful banker on Wall Street. His father, the notoriously ruthless J. Pierpont Morgan, helped create the world's first billion-dollar company, U.S. Steel.
His father, Pierpont Morgan, was a legend, the founder of J.P. Morgan. Big personality, a big person, obviously knew everyone around the world.
After J.P. Morgan passed away, Jr. inherits a fortune like no other.
Morgan has the money, power, and enemies. He once survived an assassination attempt by wrestling the gunman to the ground.
Seeing the rise of Giannini and his Bank of Italy, Jack Morgan realizes it's time to show who is in charge. After Giannini establishes his presence in New York, J.P. Morgan launches a smear campaign with a single objective: to crush Giannini's bank stocks.
At the time, Giannini contracted polyneuritis and had to seek treatment in Europe. And Jack Morgan used this opportunity to rally other bankers and traders to attack the stocks of Giannini's banks.
Within weeks, the shares plummet. Giannini knows Morgan is behind the effort to discredit his banks, but he is not one to back down from a fight. He funds a new company called Transamerica Corporation, a move designed to consolidate his banking empire and allow for further expansion.
Through actions like these, Giannini demonstrated that he was serious about staking his claim in New York, and gradually the market stabilized.
Jack Morgan's attack ultimately proves unsuccessful, as Giannini firmly establishes his banking presence in New York. But what neither Giannini nor Morgan realizes is that an unprecedented crisis is about to bring both of them to their breaking points.
Prosperity is just around the corner, say the hopeful headlines. But around the corners wind the lengthening bread lines, and a whole new class of citizens appears in American society, the new poor.
Black Tuesday devastates the banking industry. Stock values plummet, leading to massive bank withdrawals and widespread bank failures. Many banks, having invested heavily in the stock market, face insolvency. The crash erodes public confidence in financial institutions, triggering a wave of bank runs. Giannini's Transamerica stock also plummets, causing significant financial losses for its shareholders.
In the attempt to defend the value of Transamerica stock, Giannini supported the market by buying all of the 230,000 shares of Transamerica that had been dumped on the San Francisco Stock Exchange. It was a hasty and rather reckless action, which unfortunately did not serve its purpose.
As a result of the stock market fluctuations, severe internal discord arises within the Transamerica boardroom. While Giannini struggles to maintain control of Transamerica, his biggest adversary is poised to exploit the situation. Sensing weakness, Jack Morgan leads another stock raid on Transamerica, causing the share price to fluctuate severely.
And just like his father, JP Morgan Jr. hated competition. He had such a strong presence on Wall Street, through his words alone, he could move the market in both directions. And if he says Transamerica is a bad company, the market will sell off his stocks. And he instructed his people to buy them cheaply and force themselves to be on the board as well.
The CEO of Transamerica at the time is Elisha Walker, a former associate of Morgan. Soon, a larger conspiracy unfolds. The company executives and the board of directors of Transamerica begin plotting in secret to oust Giannini as the chairman. Having no options left, Giannini submits his resignation from Transamerica, the very company he founded. Along with his resignation, the majority of the California directors are replaced with New York ones, an outcome Jack Morgan has long desired. Morgan may have gotten the better of Amedeo Giannini, but he underestimates Giannini's determination, and now he vows for revenge. Transamerica is a banking holding company Giannini founded to take on the established banks in New York. But after a series of orchestrated attacks involving Jack Morgan, Giannini is forced to resign from the board in September 1931. It is a stunning setback for the banking titan.
Sometimes in life and business, you can do everything right, and things will still go wrong. The key is to never stop doing what's right.
Despite his resignation, Giannini remains a large shareholder of the company. He soon realizes he can turn his loss into victory. He immediately forms Associated Transamerica Stockholders and begins rallying stockholders to turn against the current board and management team.
At this time, Giannini, as a banker from the West Coast, had a much better reputation than the ruthless Wall Street type. He realized that the majority of the shareholders would side with him simply because of his character.
With enough support, he begins a proxy fight during the shareholder meeting. If he wins, he will change the banking world, especially on the East Coast, forever.
Sweeping changes were announced yesterday in the official staff of the BankAmericard Blair Corporation, the securities distributing company controlled by Transamerica Corporation. They include the withdrawal from the organization of 9 former officers.
And it turns out the majority of the shareholders support Giannini. He is reinstated as chairman of Transamerica and its holding, Bank of America. The old board, mostly Morgan loyalists, is fired.
There are only a few moments in history as epic as this. Here's this guy, started from nothing in the West Coast, and came to New York and toppled the king of Wall Street. And he did that without being a ruthless robber baron.
When Giannini arrived in Los Angeles at Union Station, he was welcomed as a hero. He was cheered by 1,000 employees and stockholders, eager to thank him and shower him with praise. His return home to San Mateo was compared by the San Francisco Chronicle to the equally victorious one of Julius Caesar returning to Rome.
A.P. Giannini managed to build Bank of America into a financial empire because of his honesty and willingness to work hard.
Even as a young man, Amedeo enjoyed learning new things and developed a passion for numbers.
In 1932, A.P. Giannini returns to his desk at 1 Powell Street, revitalizing the Bank of America amid financial turmoil. Giannini's Back to Good Times campaign restores public confidence, increasing deposits by $50 million. Despite regulatory challenges and powerful adversaries, Giannini's leadership ensures the bank's survival and growth. By the end of the 1930s, Bank of America becomes one of the most prosperous banks in America. But as the world plunges into war, Bank of America decides to set aside its rivalry and joins forces with fellow bankers, including Jack Morgan. Together, the banking industry provides all the financing needed to turn America into the most powerful war machine in history. By 1945, Bank of America becomes the largest commercial bank in the world.
Giannini was truly the ideal banker. Remember, the banking industry is all about confidence, and Giannini's key to success was his ability to inspire confidence in people.
Seeing his vision accomplished, Giannini finally retires and donates half of his fortune to education and research. In the spring of 1949, Amedeo Giannini dies in his sleep from heart failure.
Amedeo Peter Giannini, an immigrant son who founded a financial empire including the world's largest bank, died at his home, Seven Oaks, in nearby San Mateo today. His age was 79.
Giannini's influence permeates every corner of American society, especially in California.
Giannini's funeral took place on June 6, 1949, at St. Mary's Cathedral in San Francisco. More than 2,500 people filled the cathedral. Thousands more lined the streets outside to witness the funeral procession. He was buried in a private burial service not far from his home, at the Holy Cross Cemetery in Colma. In keeping with AP's wishes, all Bank of America branches around the world remained open all day, serving people.
And Giannini truly built a bank for the common people and has stood by that ideal until the very end.
Despite creating the largest private bank in the world, with over $6 billion in assets and 517 branches at the time, Giannini lived modestly and did not accumulate significant personal wealth. At the time of his death, A.P. Giannini's personal estate was only valued at $489,278. In the late 1950s and early 1960s, the U.S. economy experiences robust growth and stability. Post-World War II, prosperity continues. Consumer demand is high, while unemployment is low.
The early 1960s, in fact the 1960s itself, is an era of incredible economic boom, far more so than the 50s and the 70s. And particularly for the generation that goes to school, beginning in the early 1960s, nobody ever worried about getting a job. There were shortages everywhere of skilled labor and particularly intellectual labor. The universities were booming.
California's economy booms, becoming a powerhouse driven by diverse sectors. As the biggest bank in America, and after the passing of Giannini, the Bank of America needs new leadership to capitalize on this economic boom. The new CEO at the helm of Bank of America is S. Clark Buys, and he knows he must do what it takes to focus on growth of the company.
Clark Buys was shy, but he was a banker's banker. He knew the banking business from A to Z. He ran the bank by delegating, made very good appointments, had the respect of everybody, and Clark got growth going again.
In 1959, Bank of America launches BankAmericard, bringing credit cards to 2 million Californian families. This innovation sets the stage for modern credit, revolutionizing consumer spending and financial services.
This was groundbreaking at the time. Bank of America gave ordinary customers easy access to credit, allowing them to buy goods and services with them. It enabled cash-free purchase and boosted consumer spending and stimulated the economic growth.
California's economy booms, and Bank of America's deposits grow exponentially, reaching over $12 billion in assets by 1961. The bank's strategic investments in burgeoning industries like Silicon Valley's tech sector and the boutique wineries of Napa Valley set the stage for future success.
For a company or for an individual to succeed, a major factor is timing. The bank thrived because it capitalized on the era of economic growth, particularly in California.
But good times don't last forever, and the wheels of the economic cycle are poised to shift. As the 1970s dawn, America is thrown into chaos.
Fire that the authorities said had been set by an arsonist badly damaged the Bank of America branch near the University of California's campus early today.
This event was part of a larger wave of anti-establishment sentiment fueled by the Vietnam War and economic disillusionment. As the new leader of Bank of America, Tom Clausen faces immense pressure.
At the time, Bank of America had become a giant bureaucratic organization, a very common phenomenon once a company grows to a certain size.
As the bank becomes increasingly complacent, competitors see an opening to leapfrog. They develop new technologies that potentially disrupt Bank of America's entire business model. And the biggest threat comes from a much older bank, Citibank. In the early 1970s, Citibank is one of the oldest banks in the history of America, and it was once also the largest bank in the country. After facing near bankruptcy several times in the past decades and requiring government bailouts, the bank has finally stabilized. But it will take a visionary leader to regain its past glory. Walter Wriston grew up in a prestigious background. From an early age, Wriston is a risk taker because his family and network will always be his safety net.
He's not afraid to fail, and we see that with a lot of great entrepreneurs. And for some of them, it's because they come from privileged background, people like Bill Gates and Mark Zuckerberg.
After becoming the president of Citibank in the late 1960s, Walter Wriston knows that to take the bank to the next level, he must look for the next big thing. Though Chemical Bank rolls out the first ATM in the United States in 1969, Wriston immediately sees its potential. The launch of automatic teller machines becomes a massive success.
They just look like more cash machines built into bank walls. But to Citibank, they are a $50 million gamble that the consumer can be wooed and won with electronic services. Over the next year, a pair of electronic tellers will be built into the vestibules of most of Citibank's 270 metropolitan area branches, creating the largest electronic funds transfer system in the nation.
Realizing the competitive disadvantage of not having ATMs, Bank of America eventually implements them. While ATMs eventually reduce operating costs and enhance customer service, for Bank of America, it is already too late. Citibank surpasses Bank of America as the top commercial bank in the United States. The situation facing Bank of America is challenging, but Tom Clausen has one more trick up his sleeve.
In his final year, Clausen took steps to present the bank's earnings more favorably. This involved legal but aggressive accounting measures, such as marking long-held assets up to market value to show higher earnings for 1980.
This allows Clausen to boast about the bank's performance, enabling him to retire gracefully while handing the hidden troubles to the next leader of the bank. After Clausen's retirement, Bank of America elects Sam Armacost as the new president. Armacost grew up in a prestigious family. His father was the president of University of Redlands in Southern California. After graduating from Stanford and with his family connections, his career accelerates, quickly propelling him to top positions at Bank of America. Armacost knows his predecessor has left him a mess. To foster growth, the bank must embrace change. And he knows, instead of building a new business, it is easier just to acquire a successful one.
For B of A, acquisition of Schwab would be the most forward-looking move the bank had made since it pioneered computerized check handling in the 1950s.
Inspired by Walter Wriston of Citibank, Armacost realizes the importance of technology. Sam Armacost transformed Bank of America by modernizing its technology infrastructure. Despite the challenges, Bank of America increases its operating profits by 7.5%, demonstrating resilience in a tough economic climate. But a crisis brews, poised to undo everything he has accomplished.
federal grand jury in New York is investigating the collapse of a mortgage securities deal that has cost the BankAmerica Corporation $37 million, according to a state regulator from Delaware.
AMEC is a mortgage securities company that sells high-yield, short-term mortgage-backed securities to savings and loans, with Bank of America acting as the escrow agent and trustee.
The scheme promised risk-free returns backed by supposed insurance and meticulous escrow instructions, but it was built on fraudulent appraisals and non-existent properties, not unlike what happened in 2008.
Initially, Bank of America is estimated to lose $8 million. But as the scheme unravels, the loss quickly balloons to $95 million. Worse than the monetary loss is the damage it inflicts on the bank's reputation and Armacost's leadership.
NMEC was the bank's Pearl Harbor, a sneak attack that shocked the bank from its myth of impregnability. It was the beginning of a relentless barrage of hits to balance sheet, morale, and stock price that would leave the great bank crippled and Sam Armacost's career in disarray.
During the early 1980s, Bank of America faces a series of interrelated crises: the Third World debt crisis, the Penn Square Bank failure, economic pressures from high interest rates, and internal management challenges. These events collectively strain the bank's financial stability and damage its reputation. While the bank is in crisis, one man sees a golden opportunity for a hostile takeover to remake Bank of America in his image. His name is Sandy Weill. Sandy Weill is a ruthless corporate takeover man. Growing up in a working-class family in Brooklyn, New York, Weill graduated from Cornell with a degree in government, but he forgoes a career in politics, for one on Wall Street. He made his first major fortune by selling his brokerage firm to American Express for $930 million.
His specialty was acquiring multiple companies and aggressively cutting costs and streamlining operations to create bigger and more profitable businesses. It didn't always work, but when it did, it made him incredibly wealthy as a result.
But after a failed power struggle at American Express, Weill is forced to leave the company. Undeterred, Sandy Weill looks for an opportunity for a comeback. He soon realizes that Bank of America could be it. By the end of 1985, Bank of America finds itself in dire financial straits, with its stocks plummeting. First Interstate, a fellow bank enjoying great performance during the 1980s, sees an opportunity for a hostile takeover. A dying giant inevitably attracts predators, and soon enough, a man known for his aggressive takeover tactics circles the prey. Sandy Weill secures billions from Shearson Lehman, an investment bank, and proposes a merger where he would become CEO, vowing to turn the bank into a superpower.
Bank of America leaked the information that Sandy Weill was attempting to take over the bank, and the bank's stock immediately jumped, indicating that the market believed that Sandy Weill and his lieutenant Jamie Dimon would be better leaders for the bank.
There was an extraordinary cultural compatibility between Weill and Giannini. Both had built giant corporations based on a family culture. Weill's emphasis on corporate family was more than a management style. It answered a psychological need to be constantly reassured by the loyalty that only family will give. He hired all his relatives.
But Sam Armacost realizes that if Sandy Weill's takeover succeeds, it will mean the end of his career. But Sandy Weill soon becomes the least of his concerns. After years of poor performance, the board of Bank of America orchestrates a coup and replaces him with an unlikely candidate, the former president of the bank, Clausen.
As Mr. Armacost's replacement, banking sources said, the board of directors is expected to name A.W. Clausen, the president of the World Bank until last June and the chief of Bank America until Mr. Armacost took over 5 years ago.
Clausen knows that to keep the bank independent, he must fend off any takeover attempts from First Interstate and Sandy Weill. To do that, he only has one option left.
He was considering what's called a poison pill as a defensive strategy to prevent or discourage hostile takeover attempts.
To discourage any takeover attempts, Clausen utilized a poison pill strategy by issuing new shares to existing shareholders to dilute the ownership percentage of potential acquirers, making the takeover more expensive and less appealing. To make Bank of America less viable for takeovers, he sells many of its assets, including the famous Charles Schwab.
The Bank America Corporation said yesterday that it was not negotiating a merger with the First Interstate Bancorp or anyone else. The statement followed a report in the New York Times yesterday that First Interstate had approached the big bank with a friendly merger proposal.
The mid to late 1980s are a transformative period for the U.S. economy and banking sector under President Ronald Reagan's administration, marked by robust economic growth, deregulation, and a focus on free market policies. Reaganomics spurs economic growth. In the late 1980s, Bank of America achieves a dramatic turnaround under A.W. Clausen's leadership. By the end of 1988, the bank returns to sustained profitability with net earnings of $726 million, the third best in its history. The bank's stock price soars from $6 to over $19, making it the world's best performing bank stock in 1988. Approaching the new decade of the 1990s, the banking industry begins to go through yet a major shift. But this time, Bank of America will be there to seize it.
The 1990s was a euphoric period for the banking industry.
After his failed attempt to take over Bank of America, Sandy Weill, along with Jamie Dimon, scores a better deal with Citicorp, creating America's largest financial institution. At the time, Hugh McCall Jr. is the CEO of Bank of America, and he is determined his bank will not be outdone by Sandy Weill.
Having decided that there is safety in big numbers, two pairs of American banks announced $90 billion worth of mergers Monday, bulking up to compete more efficiently in an international industry that increasingly emphasizes size.
As banks like Citigroup and Bank of America expanded rapidly, they became intertwined with various financial sectors, blurring the lines between commercial and investment banking. But their unscrupulous expansion will have unforeseen consequences.
This is going to be one of the watershed days in financial markets history.
It was a manic Monday in the financial markets. The Dow tumbled more than 500 points after two pillars of the street tumbled over the weekend.
The collapse of Lehman Brothers and the ensuing market panic sent shockwaves through the banking sector. Despite its size and strength, Bank of America is not immune. The acquisition of Countrywide Financial, once seen as a strategic move, now burdens the bank with toxic mortgage assets.
While Bank of America faced significant challenges in 2008, its situation was not as dire as some of his peers. Unlike Citibank, who required multiple bailouts to stay afloat, Bank of America managed to weather the storm. In hindsight, perhaps it was a blessing that Sandy Weill failed to take it over in the 1980s.
To help stabilize the financial sector, Bank of America is forced to acquire Merrill Lynch, saving it from the same fate as Lehman Brothers. But ultimately, the Fed steps in with the help of a $45 billion government bailout and decisive management actions. Bank of America was able to navigate the crisis, ultimately emerging battered but intact. But even that is not enough. Bank of America faces internal disputes and power struggles, leading to the resignation of its CEO, Ken Lewis, by 2011.
First, he lost a chairmanship. Now he's getting ready to leave the top spot. Bank of America's CEO, Ken Lewis, steps down in December.
The new CEO is Brian Moynihan. He grew up in a large Roman Catholic family in Marietta, Ohio, the sixth of 8 children in a middle-class household.
Just like the founder, Giannini, Moynihan was known for his humility and a very down-to-earth style. He knows that in the end, the banking business is all about confidence.
To truly boost the bank's finances and image, Moynihan needs someone who can inspire confidence in investors like no one else. Warren Buffett.
Investor Warren Buffett is giving a big vote of confidence to this country's largest bank, Bank of America. Buffett is investing $5 billion in B of A in exchange for a 6% dividend and stock. Bank of America ran into trouble over mortgage investments. The move has already paid off for Buffett. Buffett made $350 million on paper yesterday when stock prices soared.
After Warren Buffett's vote of confidence, and under the leadership of Moynihan, Bank of America embarked on a remarkable journey of recovery and transformation. The bank focuses on stabilizing its balance sheet, reducing its exposure to risky assets, and streamlining operations. In 2024, Bank of America remains a dominant financial institution, focusing on digital transformation and sustainability, achieving robust financial performance despite economic uncertainties. It reports strong earnings and increases its quarterly dividend, signaling confidence in its future prospects. But as the bank expanded, the bank continues to struggle with the weight of its own bureaucracy. It still faces ongoing consumer complaints in 2024 about fraudulent transactions, unauthorized accounts, misleading promotional practices, withheld credit card rewards, excessive fees, and poor customer service. Issues include slow response times, delays in account handling, and regulatory non-compliance, resulting in multiple fines and penalties.
When you're a big bank, it's really hard to fail because the government always seems to have your back. But for a bank to truly thrive in the long run without being taken over or absorbed by competitors, it really just needs one thing. You've got to do right by the customers. It's all about the brand of trust.
A lot of times when we throw around these terms like cartel, a lot of times people associate it in a negative way, like drug cartels. Well, let's get more into these definitions, because sometimes you got to look past what's out there. And what I mean by that is, when we think of cartel, well, it's a noun, right? It's an association of manufacturers or suppliers with the purpose of maintaining prices at a high level and restricting competition. Lately, I did a video about XRP versus Canton and how it wasn't really competition. If anything, both complement each other. But from a historical point of view, when we look into a coalition, in this case, a cartel, well, it is a coalition. It's a cooperation arrangement between political parties intended to promote a mutual interest. Well, would Ripple have a mutual interest with something like Bank of America? It's clear. It's doing just that. So as I jump into this, I want to unpack some things for you guys to really give you a lot of evidence of the whole thing of Bank of America and Ripple, more than what you've seen on X, maybe possibly more than what you've seen maybe on YouTube. So one thing that was mentioned in the video was Transamerica. So Transamerica Corporation is a wholly owned subsidiary of Aegon, and that's spelled Aegon. And it's not independently publicly traded, so it has no direct public stockholders, but Aegon is in fact planning to re-domicile and rebrand as Transamerica Inc. But by when? The year 2028. And that's interesting, because when I got further into this, I said, you know what? I could have sworn I read some things from a historical point of view of interest. Well, maybe you already know about this, but in 2016 to 2017, Aegon, as in Aegon, participated in the Blockchain Insurance Industry Initiative. Now, that was referred to at that time as B3I. And they had other issuers. And it was to explore shared ledgers for data exchange, reinsurance contracts, claims, and reducing paper-based processes. Aegon's then global CTO publicly discussed potential benefits like faster settlements and standardized data. Even in the year 2019, Aegon Asset Management publicly backed what is referred to as FNZ's FNZ chain. And that was a blockchain project that was built on what? Hyperledger with IBM Fabric. Now, you guys know I cover a lot of Hyperledger and Besu and Hyperledger Fabric, all that family. But at that time, that was aimed at improving fund administration, transfer agency, and reducing reconciliation cost. So there is that. I'm going to take you out of the visuals and take you to the actual links. All right, so right here, this is from aegon.com, their newsroom, all the way back in 2017. And I know this is almost literally 10 years ago, right? So 9 years ago, technically, but this is bye-bye paper, hello blockchain. Again, always interesting to see some of these connections. More importantly, Mark Bloom, at the time, Global Chief Technology Officer and member of the management board over at Aegon, NV. And I love this quote. He says, to start with the key metrics in a digital shared ledger and turn that into legal document. This may sound like a small change, but can have a massive impact. Again, legal documents, all parties using the same ledger that directly captures all metrics of the transaction in a digital form. All right, kind of sounds like the concept of a unified ledger, right? And I'd be with you as I take you further into this. How about another source in regard to this whole thing of Aegon? There is one. Right here, we see that you have this announcement where it says the unit trust was created in the 1930s and its structure hasn't changed. All right, how do we evolve from there, right? How do we take innovation and turbocharge old models into new models and leverage that? Well, even here, you see these references, and it talks about these old types of business models with the new ones. And I'm going to read this part. Once a critical mass of asset managers join the platform, they can begin looking at developing new products as well that can compete more effectively against ETFs. And when we get to the end of this, you will see my example of ETFs. FNZ says it's been running the DLT in parallel to asset managers' existing processes, and that's the first deployments that should begin by the end of that particular year. There are 20 parties, including institutional asset managers, participating. All right, look what it says here. Its platform can interoperate with other vendors with fund admin offerings such as Calstone, which has its own blockchain ambitions, and clearinghouses such as Euroclear. Shout out to guys like Francisco Dennis Leal, who covers Euroclear quite a bit. Then we see FNZ chain operates IBM Fabric under open source Hyperledger protocol, and FNZ chose to work with Fabric because it can operate in segregated markets under the same code, which can and will be especially important as the platform extends to Asia and Australia. So again, Hyperledger. I'm always thinking of like things like the Linux Foundation and that leaked document that I shared here numerous times. So is Jesse of Apex Crypto Insights, the leaked Hyperledger Foundation document that literally shows Ripple with XRP and the concept of the unified ledger, connecting to the correspondent banking systems, connecting to the local systems, and more importantly, a global RTGS, more importantly, a global RTGS marketplace. Okay, so there is that. Taking it into this thing in regard to Francisco, I'm going to highlight this. I've shared it before, but there's a whole new wave of people. They're here. He says, probably nothing. Blockchain and Finance Conference held at French Ministry of Economy and Finance. DTCC, Swift, Euroclear, Ripple, and AFME. He tags DTCC, Swift, Euroclear, Ripple, AFME. He even tags me as well as Societe Generale with Forge, right? Now, just in case you haven't seen this in the past, you had this whole thing at this conference, right? And Swift mentioned this. What does it take to evolve financial markets? More importantly, at global scale. They had this conference, you had all these participants. More importantly, you have this whole thing of trust and global scale. A conversation that was reinforced for the need for interoperable models that allow emerging asset types to connect. All right, we kind of get the gist for the most part, but you may never have seen the actual video though. All right, I'm going to blow this up a little bit more because right here, when we get into it, you'll clearly see why people like Francisco highlight some of these things, right? And more importantly, why it really, really matters. So right here, let's keep it here. I mute this because it's just a bunch of chatter in the background, but you're going to see some familiar people. So I'm going to comment on this. So think about who's side by side here. You have clearly where it says blockchain and finance, the race for leadership. You see Nadine Shakar, who's been making the news quite a bit because of her role in DTCC. And more importantly, even her background when she was with State Street many years ago. We also see here this person who is Thierry Chalosi, Chief Business Officer over at Swift. Right next to him, you have Guillaume Elliott, who is part of Euroclear. All right. And then right to the right of that, you see Cassie Graddick, obviously Vice President and Managing Director over at UK and Europe with Ripple. Now, keep in mind, Ripple, if you're new to it all, was chosen by the Digital Euro Association as a gold sponsor. To be fair, Hedera was chosen as a silver sponsor. What's the overlap? Well, again, things like Societe Generale with SG Forge, you have both Ripple and you have Stellar, but they chose Stellar for the digital euro stable coin. All right. And then, of course, you have AFME. All these findings are really interesting, at least in my opinion. And I'm glad that he is getting it out to the masses, as he would say, the crypto bros. I guess I'm apparently one of the crypto bros, and that's okay. I'm glad to be a crypto bro. But nonetheless, the point is this. It's the panel. Yeah, these people that you literally see right there, right? They all sat in the same room. You think they're not discussing things that they're not allowed to share publicly? I think they are. I think they already have. That's just my own opinion. Taking it out of this, I want to share a little bit more. We also have this right here from Francisco. And what does he point out? Well, it's this. It says Swift's move from blockchain as a threat to blockchain as a rail is a meaningful pivot. Yeah, you don't say. Emphasis on interoperability, collaboration. Again, like I mentioned, Societe Generale, Forge, SG Forge. And it talks about how they understand the future is multi-ledger. They are not trying to replace blockchain. They are positioning themselves, basically. So that's definitely worth sharing. And more importantly, this bottom part where they talk about this right here, bridging innovation with trusted established standards for payments is an exciting challenge. So again, you can't just have the institutional regulated internet of value. You got to have value to go with trust, right? Again, Gilbert Verdian pointed that out, excuse me. We are building the internet of trust, right? Even Hedera is doing that. So there is that. Taking it further into it, let's take you out of these pictures. Let's take you back to the visuals. Remember how I mentioned Calastone? Well, Calastone, spelled Calastone, is a major global funds network. Now, believe it or not, they were founded all the way back in 2007, headquartered in London, England. And they connect thousands of financial institutions for order routing, settlement, and related services in mutual funds, ETFs, and money markets. It processes hundreds of billions of pounds in monthly investment value and was acquired by SS&C Technologies from Carlyle back in 2025. They were adopted, I should say, with other outlets, but nonetheless, they have adopted DLT at scale. And what I mean by that is through the process of tokenization capabilities. They have documented blockchain and that importance with tokenization, but more importantly, they have highlighted partners and integrations with things like Polygon for tokenized fund share classes, Ethereum, kudos to Canton, even highlighted Fireblocks for Web3 connectivity and smart contracts. And here's the kicker if you're wondering the Ripple connection. Earlier work with Microsoft Azure DLT. Now, why highlight specifically Microsoft with Azure DLT? Again, AZURE. Well, here's why. Jumping into it, Smoke points out Microsoft Azure partnered with the DTCC, currently operating a Ripple validator node. Like he says, checkmark. And look at the quote. We are exploring how the Interledger protocol, as in the ILP, can be used by the Azure enterprise and developer community to enable new and novel use cases within Microsoft Blockchain as a Service offering. Yeah, that seems to be a real thing, right? And more importantly, what do you see here? Documented. Of course it's documented. If anything, Smoke should get some merch. And his merch should basically have a purple smoke come out with a quote in the smoke that says documented. I think that'd be kind of cool, but he's going to do what he's got to do, right? So you clearly see this, and more importantly, you see how it says exploring Interledger protocol, Azure Enterprise, and again, you get the gist. Microsoft Blockchain as a Service. Why? Because several customers are taking advantage of the blockchain as a service platform and an active pipeline of partners getting on board. I think they've already done it, basically. I think they're just waiting for clarity, and then it's go time. That's just my opinion. Maybe people will disagree, and that's okay. What about this? A little bit more on the whole thing of XRP being used by American Express. Remember how American Express was brought up briefly in the documentary? Well, again, American Express, Bank of America, Santander, and Bill and Melinda Gates Foundation. This is aging like fine wine. Why is it? It's because literally you just got to go to some of the documents. So we have right here something that Smoke shared from the digitalization of markets, recent use cases of top cryptocurrencies. A lot of references to JP Morgan, right? But more importantly, you have things like Cardano, more importantly, XRP, and even Solana. And I have to highlight Solana more often because, again, we've seen integration of Solana with XRP and vice versa. And again, XRP with R3 Corda, XDC, R3 Solana, R3 and of course there's other ones. But again, in my videos the last month or two, I've been sharing with you guys how Corda is not even fully out yet, right? Its launch is sometime at the end of this year. So you got to keep that in my mind, that that's going to be big because of what? X money. And why is that important? Again, because the whole idea of Cross River Bank. So the disclaimer, of course, from X money is, oh, it's just fiat. I think that's something that they're safeguarding themselves with. Yeah, currently speaking, fiat, right? In those particular rails. But with clarity, I think everything changes because we have the evidence on Cross River Bank's website of where they specifically mention a lot about blockchain. And more importantly, we know about Cross River with XRP. And more importantly, we know about Solana being selected as a chosen one for the thing that was literally referred to as cash tags, right? And I went into detail in another video about that. I've done at least 4, maybe 5 videos on X money, X payments, and so on. I don't want to deviate too much here, but please understand that you do see in this visual XRP acting as a bridge asset, obviously, and how there's hundreds of financial institutions that include American Express, Bank of America, Santander, and how they have partnerships with Ripple, because Ripple partnered with various sustainability leaders, including Bill and Melinda Gates Foundation, aiming to hit carbon net zero by 2030. Well, whether you're a fan of carbon credits or not, that's the reference, okay? So, I know I mentioned, obviously, Microsoft with Azure. Got to give an honorable shout out to Quant Network because UK was mentioned quite a bit, especially from what Francisco shared. So, what about Quant Overledger? Now, shout out to the OGs. You've seen me share this probably 30 times by now, but what do you want to automate with Overledger according to PipeDream.com? Again, AI agents that connect Overledger 3,000 plus other apps in seconds, right? But right here, as you type in Azure, what do you see? Literally at least 12 integrations of Microsoft Azure with the Overledger. And we also know that Quant, with their Overledger Demo 2.0, what was the first one that they chose for real-time gross settlements with finality? They didn't choose Bitcoin. They didn't choose Ethereum, which was an option. They immediately went to Ripple with XRP. So that's definitely important to share. And of course, I know I mentioned some Canton there. Overledger has integration with Canton. So again, it's a multiverse world. Taking it out of that, take you back into the visuals, I want to explain this. And that is this right here. If you recall, earlier in the opening video, you saw the quote of how Bank of America pioneered computerized check handling in the 1950s. So you may wonder, how is Ripple going about that now by taking that to the next level? Great question. Simple as this. The XRPL's checks feature provides a fully digital on-ledger version of deferred payments modeled on paper checks, while Ripple's broader platform advances the real-time automated settlement that ERMA began. And if you want to look more into that, even sources like Wikipedia has that and other ones. But in the 1950s, keep in mind, Bank of America with the SRI International developed a thing called IRMA. And that's literally referred to as electronic recording machine accounting. It introduced magnetic ink character recognition, which is called MICR, and automated the labor-intensive process of reading, sorting, posting, and counting for paper checks. It shifted banking from pure manual bookkeeping to where branches were often closed early just to process the day's volume to computerized batch handling, laying foundations for more modern electronic banking. So obviously, Ripple advances this through the XRP ledger, which it developed and continues to support. XRPL includes a native checks feature, believe it or not, that recreates the familiar deferred payment model of personal checks in a pure digital blockchain form. I can't even remember the last time I actually sign off on a check, right? It's such an outdated thing. I think the last time I had to use an actual check was for direct deposit back when I used to teach school. So I want to use this example. When a sender creates a check via a check create transaction, this specifies the recipient, an optional expiration, and a maximum amount. There's no funds that are locked or reserved at creation, unlike escrows or payment channels. The check exists as a ledger object. The recipient later cashes it with a check cash transaction for an exact amount and up to the maximum or a flexible amount with a minimum/maximum range. Funds only move at cashing time. If the sender lacks sufficient balance or liquidity, then the cash attempts fails and can be retried until expiration. So again, If the sender lacks sufficient balance or liquidity, well, again, people are like, well, what about Ripple with on-demand liquidity? Exactly. This thing goes exactamundo. Again, you would tap into it. Some people say, well, that'd be temporary. Well, that's okay, because at the end of the day, if they keep getting tapped and now you multiply that by millions, maybe billions of people and so on, this is game changer any way a person wants to dice it up. Because again, if the cash attempt fails and can be retried, well, it can be retried until expiration. So either party, from what I gather, can cancel before expiration. And after expiration, anyone can cancel the leftover object. So successful caching or cancellation removes it from the ledger. If you want to read more about that, you can go to the xrpl.org documentation that talks more about this. So again, people will ask how this takes computerized check handling further. Well, again, no physical paper. So MICR, clearinghouses, or multi-day settlement cycles are there, and everything is an on-ledger object with cryptographic authorization. So settlement finalizes in seconds. Where? On the XRPL. How? Typically 3 to 5 seconds at near zero cost, rather than through batch processing. I'll say it again, rather through batch processing. So even with intermediary banks or traditional check clearing systems, this is awesome, right? And it has built-in modern controls. So again, expiration, cancellation rights, flexible redemption amounts, and compatibility with features like deposit authorization. That all lets accounts reject unsolicited direct payments. So this supports compliance needs, all right? So think about that. Institutions carefully accepting the funds while remaining familiar to banking processes. What about support for XRP and issued currencies? Well, checks work with more than just the native asset, and that would enable broader use cases. So again, do we have something that would be asynchronous and resilient? We would. Just like paper checks that people are all used to from many, many decades ago, the money does not move until the recipient acts, but with automatic ledger enforcement, retries, and no risk of physical loss, fraud via altered paper, or slow interbank clearing. This is why the concept of atomic settlement is so important, because either all the transactions go through or none of them do. All right, because that's a security feature, not just because it sounds really cool and super fast. So I thought I'd point that out. And more importantly, in short, IRMA, as ERMA, computerized the handling and accounting of physical checks. But XRPL checks and Ripple's payment infrastructure do what? They digitize the instrument itself, removing the remaining physical and intermediary friction and programmable controls and near real-time finality, and embed all that in the process in a shared, transparent ledger designed for global value transfer. Again, through what? The Internet of Value. Whose Internet of Value? Ripple's Internet of Value. What asset would really shine in this case? XRP. And some people point out, oh, it's just RLUSD. That's an option for right now. And it may very well be into the future too, don't get me wrong. But be glad that RLUSD actually exists. Why? Because that is the only form of clarity that there is out there. You cannot blame Ripple for creating RLUSD. So I know that a lot of people flood the whole concept of stablecoins and whatnot, but you even look at it from the perspective of Bitcoin and understand there's a lot of negative press when it comes to Tether, and rightfully so. But can you imagine a world of BTC without Tether? Boy, oh boy, I don't even know what price BTC would be, right? It would be probably down into the dumps, because we know that stablecoins are the enablers. Those are the pairings that allow for things to be collateralized, I should say. So in the end, this is the logical next evolution of the automation of what? Bank of America, again, pioneered. Before we close things out, I want to take you over to here. This is more evidence that you need to see for yourself. Right here, remember, Ripple has already confirmed they are working very closely with Bank of America. I've shared this before. Shout out to the OGs. This is just one of the major bank partnerships contributing to Ripple's 90% global network coverage. Hear it from Marcus Treacher below. Yeah, 39 seconds, because again, Bank of America CEO back in 2025 says financial industry will jump into crypto payments if regulators allow it. Will we see clarity at the end of the year? I know. People are saying yes. Some people are saying no. More people have shifted from yes to no. But nonetheless, when we see things like this, I think there is hope. We'll have to see how it pans out. Listen to this. This is under 40 seconds. Here we go.
US major banks on Ripple, question here. We're working very closely with Bank of America, Merrill Lynch. They are one of the 7 core banks that's helping us create our governance plan. So this is Bank of America, Merrill Lynch, CIBC Canada, Royal Bank of Canada, Mexico, Citi, the other 4 banks in the world. Santander Group, number 19 worldwide, and Standard Chartered Group, and West Bank Australia. And business banks give us a good global spread around the world. So very good input from different markets and
So there you have it, even right there, right? That's another great example. Taking out of that, let's also point out this right here. And again, big shout to Smoke. If you're not following him on X, you need to, over at SMQKEDQG. I share this, of course. Ripple, JP Morgan, Bank of America, Wells Fargo, Citi. Again, think of everything you saw in that video documentary, all right? And more importantly, you see the documentation from docs.ripple.com. A lot of familiar players, but more importantly, the juggernauts, JP Morgan Chase. And then more importantly, the other next page where we have this. And it is, like I said, domestic, international, PayPal, obviously Bank of America, Merrill Lynch, Nacha, right? The automated clearinghouse, as in the ACH. You have, obviously, United States Federal Reserve System. And you have this where it says built on Ripple, Federal Reserve, settlement infrastructure, Ripple, and again, Swift. I mean, you see the orchestration. You plain as day see the orchestration. And that is definitely worth sharing, at least in my opinion. There's another good one right here. This is directly from the source, or Swift.com. Talks about some of this where it says, yes, banks can use the ledger model. Why not? But whether they will or not is another matter. Wells Fargo is looking at this area using Ripple as are a lot of other banks. You can use the blockchain for mortgages, title deeds as well. This is where I felt like utility-based entities are really going to shine, right? Even things like what XDC is going to be doing. Even Quant Network, right? Has QRC 721, smart NFTs. There is that. But our technology allows fiat and cryptocurrencies to exist in parallel. Yeah. Again, that's there. Great clipping from Smoke once again. And then the last one, this is the icing on the cake, at least in my opinion. You have right here from Citi, because I got mentioned quite a bit, right, at the end of the documentary video. And right here it says, Bank of the Future, the ABCs of digital disruption in finance. And right here in this document from the xrpl.org, says escrow is designed as a feature to enable the XRP ledger to be used in Internet Ledger Protocol. I'll show you where that's connected. Escrow only works with XRP, not tokens. Notice how it says only with XRP, not tokens. And as you see right here, has illustration of Germany's correspondent bank and to the middle part of the XRP pool. You have Brazil, you have Japan, you have the United States. Again, really interesting to see this, because as we connect this, it goes to the Internet Ledger Protocol, ILP, because that solves the whole thing for interoperability and could ultimately lead to building an entire network of trust and facilitate peer-to-peer payments. ILP could be helped, or I should say, ILP could help reduce settlement times and facilitate low-value payments. So there is that. And again, more of these sources, you kind of get the gist. And yeah, really interesting to see some of these visuals. Last but not least, shout out to Bank XRP. This has been making a lot of headlines lately. This was literally shared the other day on August 14th, so just a couple days ago, depending on when you get this video. Bank of America just showed up on the XRP ETF cap table. Now, a lot of people are already sharing this, and I get that. There's always some random Yahoo be like, oh, news, Maximus. Oh, no. Extract anywhere but Steam folder. I know I'm going a little crazy right now. But anyway, Fresh 13FHR filed today discloses a 13,260 share position in a volatility shares XRP ETF. Wall Street's biggest names are quietly stacking XRP. This is great. You want to see some of this. You want to see the proof in the pudding, right? So you see Bank of America right down there. And more importantly, do we have any other examples that are recent? You do. You see August 14th, 2026 right there, right? All right. What about the next visual? Yep, right there in the visual, plain as day. I don't really need to make it bigger. You see under the volatility SHSTR XRP ETF. So that's awesome. I'm glad that he's using Control F to find it. Control F can be your best friend. And more importantly, even from this guy, shout out to Zafe Crypto. Wells Fargo is in XRP. And let's blow this up a little bit. There's where he found it. So you clearly see that source. Yeah, you clearly do, because like it says, Wells Fargo is one of the largest U.S. banks, has 2.1 trillion total assets, 2.5 trillion in client assets, shows approximately 9.18 million in Bitwise XRP ETF exposure, and a bank of this scale disclosing millions in XRP ETF exposure is worth watching. So I know a lot of people are pointing out, oh, Brad Garlinghouse is missing. You may actually consider that a blessing in disguise. He may be actually working behind the scenes with the biggest players. Maybe the best is saved for last. So that's what I have for you guys today. I think that was a lot to unpack. Glad to basically unpack it with you, but I thought I would go a little bit deeper with the whole thing of XRP and Bank of America, the cartel of U.S. finance. Again, think about the big players from JP Morgan who have always pushed back, and think about, again, the history of guys like what you saw from the founder of Bank of America, Bank of Italy, and then how it became Bank of America, and then went from there to some of these other familiar players, right? If you've ever been to San Francisco Bay Area, remember that old, the biggest tower they had there, right? It's not called that anymore in regards to specifically, was it Transamerica, right? But all those things are worth citing. All those things are interesting. So do me a solid, if you listen to the entire outline, simply type in this key phrase into the comments, and that is XRP BOA US Finance, or you just type in XRP BOA, and it lets me know who stayed the course of this outline. I get it, guys. You want shorter videos, but at the same time, I'm going to keep doing what I do. So I appreciate everybody who listened. I will definitely see you guys in the next video, and may the Lord Jesus bless you all. We'll see you in the next one. Over and out. Bye-bye.